Hello, my name is Taylor Anderson, and I am the production accountant for Gemstar Productions. I have gained so much knowledge this month, and I am here today to give you a report on what I have learned. While I was analyzing financial data sheets, I thought about what makes up a positive and a negative trend. The budget sheet, the profit and loss budget versus actual, and the statement of cash flows all contain positive and negative trends. A positive trend can include increased income, as well as spending less than what the budget allows. This ends up saving the company money and increases net profit. A negative trend can include decreases in sales and spending more than the budget allows. This ultimately results in less net profit. To enhance positive trends, it is very important to put emphasis on planning and budgeting. At Gemstar, we need to make sure that we continue to work to increase sales and stay within our budget. We want to do what we can to reduce expense costs on things such as office supplies. Decreasing negative trends is similar. We need to make sure that we do not go over budget for our expenses, and we should always strive to reduce expense costs. Budget variance refers to the amount spent versus the budget amount. For example, I set the Gemstar budget for equipment rental at $700. From January to December of 2013, we spent $750. I also set the budget for office supplies at $500. We actually spent $666.67. Our goal is to lower the budget for these expenses and attempt to meet that goal with our actual expenses and strive to pay less than what we set for our budget. When this happens, we will save money and make more of a profit. The following internal controls will help improve Gemstar Productions' current internal controls. Separation of duties assigns different duties to accountants. This makes sure that one accountant is not doing too much. This prevents errors because so many people are overseeing one transaction and checking for mistakes. Physical security will protect physical records, cash, and other assets from theft, damage, or loss. Documentation provides evidence of a transaction, including who performed the transaction. This will clear up confusion and allow for accountability if there is a problem or question. A lockbox for cash with a limited number of people with access to it will eliminate the possibility of theft. Finally, inspection will be performed on all transactions. This will ensure that policies and practices are being followed and transactions are being done correctly. This eliminates the possibility of inaccurate accounting. While working for Gemstar Productions this month, I have become an expert on many familiar concepts. GAAP, or Generally Accepted Accounting Principles, are the rules that govern acceptable accounting principles. They are used to make financial statements reliable and consistent. A balance sheet includes anything of value to a company, as well as anything that the company owes. Items listed on a balance sheet are assets, liabilities, and equity. The income statement shows all of the revenue of a company minus the expenses. The final calculation is called the net income. The statement of cash flows shows three things: the beginning cash amount, additions and subtractions made during a financial period, and how much cash is left over at the end of the period. Budgeting is a planning process that helps companies control their finances. Budgeting is a good way to ensure that revenue exceeds expenses. The budget versus actual statement shows actual costs of a company compared to the budget they have created. This allows the company to pinpoint areas where they might need to make changes. Double entry accounting is a system of accounting that requires that the sum of the debits be equal to the credits. An asset is a debit and a liability or equity is a credit. I use this process frequently while recording transactions in QuickBooks this month for Gemstar Productions. Auditing is the examination of a company's financial statements by someone not affiliated with the company to ensure they follow the rules of generally accepted accounting principles. Fraud is when someone intentionally manipulates data on a financial sheet to receive personal gain. Internal controls are procedures established to ensure accurate, sound, and reliable accounting practices. They also help prevent errors and fraud. Thank you.